Hello and welcome to Commodity Champions. I'm Manisha Gupta. It's that time of the year when the gems and jewelry sector works overtime to meet the festive demand. The gold prices are at a 6-year highs in the Indian markets. Experts believe that this might act as a deterrent for the buyers. Over the last 2 years, government policy framework has meant that the trade also has shifted from the unorganized sector to the organized sector. Meanwhile, the drought-like situation in 5 states has hit the rural demand when it comes to gems and precious stones. Both diamond jewelry and platinum demand has been boosted. And when it comes to crude oil prices from last Diwali, the Brent prices have gone up by 18%, while NYMEX is up by 14% as well. It's a sorry state of affairs, though, when it comes to the metal prices. In last 1 year, it's only steel which has given positive returns since last Diwali. Lead and zinc have seen the largest declines coming in, both falling by 20% each. And to discuss this further, we have the whole set of guests joining us today. Kunal Shah from Nirmal Commodities. Renisha Chainani is from Monarch Networth. We also have Naveen Mathur from Anand, Rathi Shares and Stock Brokers. And also joining us today is Prathamesh Mallya of Angel Commodities Broking. Gentlemen, hi. Thank you so much for joining us. Renisha as well. Let's start with the precious metal state to start with. The first half of 2018, of course, wasn't so great. We have seen the gold prices pick up recently now. If you look at the last Diwali until now, it's nearly 8% of gains coming in until now. Renisha, I will like to begin with you. What is your sense on the precious metal space? I mean, we started the year with most people telling us that silver perhaps will outperform gold. That clearly has not been seen. Gold continues to hold its firmness here. At these levels where we are trading at a 6-year highs, what is your sense on where are we headed from here on?
Hi Manisha, I think what you're saying is very much right, that silver was expected to outperform gold this year, but as base metals have not performed, we have seen that from the month of April, US-China trade war started and then base metals were hammered, and this didn't give support much to the silver prices, and they have been trading lackluster from so many months. But I think from last 1 month, the movement has gathered up, and we are finally seeing some bullishness coming in gold and silver, both the metals, and there are a lot of factors that are impacting right now to the prices. We have seen that central banks have started again accumulating gold in last quarter. As per WGC data, there is around 150 tons of buying by central banks in last quarter, and this has compensated by the ETF selling that has coming in from few months. So overall investment demand is good. Speculative demand is also very good. We have seen that speculative interest has again risen up, which was at record low levels. It is again turning up, and festive demand is also going to come within now next 1 month. So overall, I am seeing that prices will recover from here, and 2019 also would be a good year for precious metal, as I think Fed will stop, wrapping up. It will start wrapping up its interest rate cycles, and in the second half of the year, we'll see ECB also raising its interest rates. So this will give some negativity to dollar, and in turn will give positivity to a precious metal pack. So I'm bullish on gold and silver, at least expecting 10% gains from current levels. So my view is overall bullish till next Diwali.
All right, 10% gains in gold and silver. Prathamesh, what is your sense? Are you equally bullish on gold and silver? What levels do you see getting in here? And how much do you think the rupee movement also could impact the calculations?
Yes, Manisha, I think as far as gold goes, for Indian consumers, it is really not the price. I think because it is mainly for consumption. So from a returns perspective per se, I would really not look at it. But yes, from an international perspective, I think 8 to 10% possibilities there if you look from an year perspective or 8-month perspective per se. But I still believe there is not much bullishness left in gold, because interest rate cycle from the US, as Renisha mentioned, would possibly go in 2019, as well as ECB starting its interest rate hike, is something that would really not offer a respite to gold, because an era of rising interest rates does not really favor gold prices. So in that say, not the bullish on gold, but yes, you can have your portfolio allocation at least 7 to 8% in gold. While as far as silver goes, I think 40,000 in the Indian markets is something what we're looking at, just 7 to 8% move from current current levels. So not so bullish, but yes, you can have it in your portfolio.
All right, some bullishness is good for us as we stand right now, because this year started really bad and the way we seem to be ending it is clearly on the positive side here. Turning to the studio guests now, and Kunal, to you, what is your sense? Precious metals finally are getting their due. We haven't had such a great year, but at these current levels, with the kind of global people forecasting it much higher, even 1400 perhaps in the next year, are you in with that?
I'm actually very bullish on gold, and I think that in past shows from last decade, I generally recommend that 8 to 10% should be allotted in gold. I'm of the view that percentage should shift to 14 to 15%, as high as it, because the global economy is right now in uncharted territory.
Sure.
No one is going to know what's going to happen. I think the biggest problem right now is in the global economy that when Federal Reserve is selling the bonds of their balance sheet, it's creating a lot of volatility. It's creating a lot of uncertainty. So in this kind of atmosphere, having gold in your portfolio is must. So on one hand, we have US GDP numbers coming in at 4%, 3.5%, and interest rate going up, which is theoretically negative for gold. But the fact is, along with the rising interest rate, we are also seeing something called balance sheet reduction. The Federal Reserve balance sheet in last 10 years have expanded by more than 4.5, 5 times. And now that balance sheet is shrinking roughly about $40 billion per month. That comes to almost $500 billion per year. So this liquidity is going to come off the market. And what it is going to do to the other asset class, no one knows it. This is the first time this kind of experiment has been done in last century. So in this environment, more than the returns point of view, having gold is a must. I'm very bullish, and I think that gold prices can hit levels conservatively $1,400, and I won't be surprised even if it tests and levels of $1,450 to $1,500 in a span of 1.5 years.
And what's your sense on the Indian prices then, Kunal? Because rupee is yet another factor to look into here.
Yeah, so let us say if rupee start appreciating after we've seen a 15% fall in rupee, if rupee start appreciating from present levels and perhaps test levels of say 69 or so, in that case of 3 to 4% or maybe perhaps 5% of gold's appreciation can be completely taken off by rupee. But I think when you are talking about the upside of 10 to 15%, still you are likely to get gold conservatively 35 to 36,000 on MCX by next Diwali. So I'm talking about conservative 10 to 12% return from these levels.
All right, so we just keep getting more bullish here when it comes to the gold prices going forward. Coming to you as well, Naveen, what is your sense? Are you in agreement with all the other three panelists, or are you somewhere in the middle?
I think I won't go for that bullishness
Okay.
for the gold prices. Everybody has their own perceptions to look into. I think, Manisha, the $1,200, $1,270 which we saw last year, it's hovering at around $1,233. The reason is simple. The US is onto the inflation trend. We are seeing inflation at around 2%. And that's where the moderation of the interest rates are going to come in. Now, with that particular moderation or the normalization of the interest rates, the dollar is bound to appreciate. Plus, the reserve currency factor of the dollar would also help us or help the currency to move a little bit on the upside. Having said that, there are certain geopolitical risks which continue in the Middle East, which will going to impact the markets largely globally, both the US and the Indian markets in terms of the gold prices. I think overall, people are talking about $1,300, $1,400 right here. I think around $1,250 to $1,300 would be something where it's going to be stabilizing at. I'm not too bullish on $1,400.
You know, but this year we have seen a range of 1156, 1159 to 1366 on the higher side.
And that was the reason, just because of a simple reason of the crude and the depreciation of Indian rupee, which affected the markets here too. See, the MCX prices touch approximately a high of, if I'm not mistaken, at 32,300 rupees in October sometime back. And we are trading at around 31,650. The fundamental news of crude plus the depreciative rupee led it to 32,000 plus kind of a figure. But beyond that, there is nothing as such which is positive. You have seen the import figures have gone down. We are seeing rupee stabilizing now at around 73, 74 levels. The crude has come down off late pretty strong. Means the Brent crude is around $72, $73 right now.
You know, so but that is always my question. When we start this year, you never know what it has in in store for you.
Absolutely.
So even even when we predict a new year, you don't know what's really going to happen next year. So the best...
See, the dynamics have changed, Manisha. Of late, in the last decade, after this 2008 financial crisis, there's nothing constant or sacrosanct, which you used to say the correlation, so to say. So if you don't have those kind of correlations happening, the markets would remain uncertain, and it's a guess. You always have. And the interest rate cycle for the US is, one is due in December, and the other one for another 3 hikes planned for 2019. So all that would lead, on theoretical basis, appreciative dollar. And if appreciative dollar, the dollar denominated
that really is my next one, because yes, it all comes down or boils down to the US dollar. But just to get the numbers out of you, since everybody says that the gold can appreciate anywhere between 8 to 15% going forward, what is the number that you're working with?
I think I won't go beyond around 5 to 6% from here. In dollar terms, if you really ask me, that becomes around $60 from here, 12,033, around $60, $70 from here. So 1,300 is what I'm targeting at by the end of, means the financial, by next Diwali or so. So I think 1,300 would be the level, a crucial level, which we should look into, keeping all those negatives of the currency related to dollars in place. So I think $1,300 would be something. And in Indian markets, if you really ask me, I would be around 33, 34, 33 and a half, 34. That's it.
You are being very, very cautious.
Yeah, I am very, very cautious because I don't see any positive happening around except for the risk-averse factor of equity markets or maybe geopolitical tensions.
All right, let me do a quick check on the silver prices as well, because when we started this year, almost everyone in unison had said that the silver prices will overshoot and we perhaps will see an overperformance. That clearly has not been the case. But starting again from you, Renisha, what's your sense on the silver prices and are you putting your bets there?
Yes, I would like to put my bet in silver also. I think prices could appreciate as much as 44,000 to 45,000 by next year. So at least I'm expecting from this current level 17 to 18% gains from current levels. Gold would be on the higher side because of safe haven bids also. And as we are seeing somewhat relief in this US-China trade war, this is also helping the precious metal pack. So silver would get support from gold also, and as base metals have also started to recover after so much of hammering, it is going to help again to silver. So overall, good gains coming in from here in silver also, at least 17 to 18%.
Kunal, what is your sense? 17 to 18% is what we've begun with in sense of silver.
Before giving the targets, the reason why silver went down is in the month of May, when Trump announced the trade war with China, I think silver is one of the the electric demand of the silver was expanding at a rapid pace. And the moment you got this trade war announced, it got hammered badly, with the exception that the demand from the Taiwan, Korea, China will perhaps go down. And that's the reason why silver underperformed. But going forward, if gold prices are likely to move up, well, silver has a higher beta than gold. And if you look at the last 10 years of mining data of silver, if you look at the mining growth in silver, it's minuscule. So under these circumstances, when the bull run in gold gets fueled up, the reason why gold is going to go up is because of the uncertainty which is going to arise out of the monetary policy which is being adopted by the Western world. And at that time, I think silver on MCX can test easily 45 to 43,000 conservatively. On COMEX, $18.5 or perhaps $19. But remember, silver has underperformed. The moment we remember 2007, 8, 9, whenever the bull run of precious metal began, at that time silver outperformed gold with a huge margin. So that has been a completely opposite case from last 3 years, and that can definitely reverse.
All right. So silver prices, of course, expected to be higher as well. Yes, it's a smaller commodity, tends to be very, very volatile and does tend to outperform gold on the downside and the higher side as well. But that really brings us to the base metal prices now, because silver will take a lot of cues from that. The kind of fundamentals that we have seen in the international markets, whether it has been the US and China trade concerns, the economic data that has been coming in from China, which has been slower. But the US data, of course, has been on the positive side. And, of course, the kind of infrastructure rush that we have seen the demand, the lower mining, and of course stronger deficit numbers that have been building all does point towards better metal prices going forward. Hasn't been the case in last 1 year because almost all the non-ferrous metals are ending this year in the negative. But going forward, and let me bring this to you, Naveen, what is your sense? How are you looking at the base metal prices? Anything that comes out as your favorite here?
Tricky. I think aluminium would be something which one can look into. Even nickel and aluminium can be something which can, during this particular year till next Diwali, one can look into. We are seeing the prices to a target of approximately 160 rupees. So buy for a target of around 160. I think the stop loss is very relevant here because of the choppiness, as you rightly pointed out, Manisha. Put the stop loss below 113 or so. I think both nickel and aluminium, we would go for a buy till next Diwali.
All right, so nickel and aluminium are the best buys there. We will come back and talk about metals some more, but have to take a very short break at this point in time. Don't go anywhere. We continue our conversation here on Commodity Champions.